Hi everybody, this is Lara with your end of the week analysis for gold for the trading week ending Friday 28th of February. I'm expecting finally that there is a high in place for gold. I've been expecting it for a while. I had expected one final little high, very slightly first. That didn't happen. Gold has seen a really strong downward movement. I am expecting that the bear market has resumed to eventually make new lows below 1046.27. Let's look at the Elliott Wave count first, classic analysis last. At the weekly chart level, this is still the main Elliott Wave count. It still has the best look. At the monthly chart level, it still has the best fit. This wave count is very bearish. It sees a huge double zigzag complete just this week for Super Cycle Wave B. The first zigzag in the double is labelled Cycle Wave W. The double is joined by a corrective structure in the opposite direction labelled X, which subdivides as a regular contracting triangle. And now the second zigzag in the double labelled Cycle Y, A, B, C, looks like it's complete with this huge bearish engulfing candlestick pattern this week. If B is over there, then C needs to subdivide as a 5-wave structure and would be very likely to at least make new lows below the end of A to avoid a truncation. Along the way down, if we see a new low by any amount at any time frame below this confidence point, then the bullish wave count will be invalidated, and at that stage I'll calculate targets for you for Super Cycle C. I'm not prepared to do that yet because those targets are going to be very, very low. Suffice to say now, I expect it'll be below this point. Let's take a look at the daily chart level. We're going to look at this high and this low here, this high and this low here. Here's the end of cycle Y, A, B, C, completing the zigzag for double zigzag for Super Cycle B. There may be now an incomplete 5-wave structure to the downside. 1, 2, 3. I'm looking for a little bounce or sideways consolidation for 4 to last maybe a day or two, maybe 3 or 4 at the most, and then 5. 4 may not enter into wave 1 price territory. When intermediate 1 is over, intermediate 2 may not move beyond the start of intermediate wave 1 above the invalidation point. Look out for support about this upper edge of the best fit channel copied over from the weekly chart. The long lower wick for Friday's session does suggest some bounce may arrive for this little 4th wave correction early next week. At the hourly chart level, here's the possible end of Super Cycle Wave B. -1, -2, -3, -4 may end about the 0.382 Fibonacci ratio if it finds resistance at the upper edge of this Elliott channel, and then wave 5 on to new lows. When I know where 4 has ended, I can apply the Fibonacci ratio between 1 or 3 to 5 to calculate a target for 5 for you. I can't do that yet. Draw this channel from 1 to 3, place a copy on 2, look for resistance at the upper edge for this 4th wave, which may not move into wave 1 price territory above the short-term invalidation point. Alternatively, this is a very bullish wave count for gold, but it still expects a cycle degree 4th wave should unfold, which may last many months, possibly even over a year. If the bear market for gold was over back here, then the first move up off that sustainable low should subdivide as a 5-wave structure. In order for that to have a decent fit, I have to see it over here. Previously, I'd seen it over here. That also is possible. It just has more problems in terms of normal behaviour for this market. So if we see cycle wave 1 over here, now cycle wave 2 could fit as a double flat correction. 3, 3, 5 for primary wave W. The double is joined by a 3 in the opposite direction labelled X, and then another 3, 3, 5 flat correction for primary wave Y. The problem now becomes, if we see it this way, intermediate wave C has to subdivide as a 5-wave structure. You can't have a triangle as a sole corrective structure in a 2nd wave position, so this wave count has to ignore what looks like a very obvious triangle, particularly at lower time frames, and see it as a series of overlapping 1st and 2nd waves. That will fit, but this wave count feels really forced. just like it did having seen cycle 1 over there. So no matter how I try and resolve it, there are problems in terms of Elliott wave. But let's consider all possibilities. If cycle 2 is over there, cycle 3 could now be over. Cycle 4 may be expected to last many months. Cycle 2 lasted many, many months. I'd expect cycle 4 may not be as long lasting. It would most likely subdivide as a zigzag and be more brief, and it may not enter wave 1 price territory below this invalidation point. At the daily chart level, here's the possible end of cycle 3. Cycle 4 needs to subdivide most likely as a zigzag. It can be any Elliott wave corrective structure though. The first 5 down is labelled intermediate wave 1 with minor 1, 2, 3, still 4 to unfold and then 5. At the hourly chart level, the wave counts now look exactly the same. They won't have a target for minor 5 until I know where 5 begins, because 4 may have ended. I can't do that yet because I don't know where 5 has begun. When 4 may have ended, possibly about the 0.382 Fibonacci ratio, I'll apply a Fibonacci ratio between 1 or 3 to 5 to calculate a target for it. 4 may not move into wave 1 price territory. At the weekly chart level this week, gold has completed a really strong bearish engulfing candlestick pattern with a long upper wick, which is also bearish. Push from volume for downward movement within the week is also bearish. This is a very, very bearish reversal pattern, and it comes after ADX reached very extreme and RSI reached overbought and exhibited bearish divergence with price. This is the high for gold that I was waiting for, and it's got a strong indication that a sustainable high is most likely in place. This chart offers quite a lot of support to the main Elliott wave count, well also to the bullish count, which expects a cycle degree correction may have begun. On balance volume confirmed the last highs in price, no bearish signal here this week. ATR is increasing as price is moving lower. There's strength in downward movement. Stochastics also overbought and exhibited bearish divergence with price. At the daily chart level, this is a particularly strong bearish engulfing candlestick pattern. It engulfs several prior daily candlesticks. There was a gravestone doji and a bearish long upper wick at this high back here. Volume is strongly pushing price lower for Friday. On balance volume is nearing support. This support is weak, but it may assist to initiate a bounce. Bearish divergence almost disappeared between price and RSI here. We're still getting downward movement though. ADX reached very extreme for the prior upward trend, so now we see a really strong bearish candlestick. We give that a lot of weight. ATR strongly increasing as price falls, and MACD gives us a bearish crossover. This chart offers quite a lot of support to the main Elliott wave count. That's all from me this week with your gold analysis. I hope all our members are having an awesome weekend.